It's good to see you both. Barton, let me begin with you because a lot written over the weekend about, according to some, what a weak case Musk has going into this. Do you think he's still got a couple arrows left in his quiver?
Correct. Look, I think that one of the arrows that he has is the discovery process in court. So, I think that there's reason to be cautious and concerned about what could come out. Twitter has a history of restating Dow. It hasn't told Musk precisely how it calculates the bot, spam bot, and that would be easy for them to do. They haven't done it. So it suggests that maybe they don't want that out there. And so, I think that the risk is that there's some doubt put on the numbers. That makes it, difficult to complete the debt financing, combined with the recession, combined with the damage that all of this uncertainty is doing to the company. And if you don't get this deal done, the stock, I think, could be much, much lower than what we see today. So I think that incents the board to make a meaningful compromise after a long, ugly, tortured road, which I think we're on right now.
Yeah, Barton, I don't expect you to be an expert in all things Delaware law related, but you did make a reference there to what the stock would be worth were there not to be a deal. So give me the number. What is Twitter? If I just say today he goes away and he gets off, so to speak, maybe it's $1 billion, but whatever it is, what's Twitter's stock worth in this current environment?
Okay, so we're arguing that it would be suffering at the low end of peers. So it could be an $11 stock. That would be based on a 90% plus decline from the 52-week high, which would be at the high end of what peers have done, and also reflecting the fact that the business, I think, has been meaningfully disrupted. And
Justin, $11 says Barton. Justin, same question to you. What's Twitter worth? Because there are a lot of obviously investors right now who are weighing the strength of his case versus the possibility that he actually were to prevail somehow, and therefore Twitter would be an independent company again. Where do you come in terms of a fair valuation?
Yeah, and I'd say there's actually a third issue in there, too, with the economic cycle being incrementally worse here, Twitter having 85% of its revenue exposed to brand spend. The longer this persists, the worse that fundamentals get. So, if I just look at peers right now, Meta trading at around 10 times EBITDA, give or take, Twitter still having a high teens multiple to it, that suggests that you could be looking at something that could be 40% to 50% lower if something doesn't occur. So it's kind of a unique scenario here where Twitter absolutely wants to close things. And now we have to wonder, is this a negotiating tactic, or has he changed his opinion on whether he actually wants to buy Twitter?
Yeah, and it explains why initially, Twitter wasn't too keen on selling the company, and now they are going to Delaware in order to try and ensure that this deal closes. But another option, of course, is that of a settlement. And I'm curious, Barton, you've given us kind of the downside scenario if they don't come to a deal at all. But what if they come back to the bargaining table? What type of a price do you think we should be looking at for a potential renegotiation of the deal?
Look, what I'm arguing is that Twitter should be a $33 stock, which essentially splits the difference between $11 and $54.20. And it would be a meaningful concession from the board, and one that I think would come after a long tortured road of disclosure, risk that the deal falls through, and Musk ultimately saying, okay, it's now cheap enough that I can move ahead.